we are going to start up with chapter 3. And if you don't already have your textbook with you, you might want to get out your textbook and go back to chapter 2, because I think if you have your governmental fund statements out, page 33, right? The balance sheet for the governmental fund and the statement of activities for the governmental funds from page 35. I think following along will be a little easier. The PowerPoint doesn't really follow this, but I think having one of these actual statements to look at will be helpful to understanding what we're talking about in this PowerPoint. So if you want to get that out, pause the tape and get that. I would say get that 33 and 35 in front of you, and I will probably refer to those a bit as we talk. All right, so chapter 3, here we go. All right, so we are going to really delve into the governmental funds statements and where those numbers are sourced. All right, so that's why I want you to have those in front of you. So we're going to look at the governmental funds. We're going to talk about revenue recognition and expenditures using modified accruals a little bit. So you may recall that when we looked at the fund statements for governmental funds, we had to do the little reconciliation so that when we brought over these numbers to the government-wide statements, they would match, because government-wide statements and proprietary funds, they're done using accrual basis, just kind of the same way we do in regular old accounting. But the governmental funds, they use modified accrual. So we need to talk a little bit about that so you can understand what's going on. And we'll understand the different classifications for the funds. All right, because first thing we're going to look at here is when you look at page 33 and you're looking at your balance sheet, you'll notice that down at the bottom we've got assets minus liabilities equal fund balances, right? They don't really equal owner's equity because we don't have that. We're just using different funds. And then at the end there's a balance, right? I think of it kind of like calculating retained earnings. This is what's left over. But anyway, if you look at these fund balances, we didn't talk too much about this in chapter 2, but there are separate categories of fund balances, right? Everything about accounting is getting things in the right categories. That's all accounting is. So we've got a couple of different fund balances to look at here. Assets minus liability equals fund balance, but we got to pick the right type of fund balance. So we're going to learn that. We won't actually, I don't think, prepare too many journal entries, but you kind of need to understand that there's a few interesting ways that we journalize stuff. And what makes it modified accrual is that we're going to journalize stuff like budgetary items that nothing has really happened. All we've done is approve a budget. So it's kind of different, and it's interesting, I think. And if you think about the way governments work, not just cities, but governments, the way they work with funds appropriations, that it will make sense. So keep thinking in your head, okay, well, this makes sense. Somebody has to approve this budget, and we want to see if we meet the budget, and we can't go over the budget, so we put those funds on the books somewhere. It kind of starts to make sense. So keep that in mind, why we do how we do things. All right, so let's talk about this. There's this distinct system of accounting that we use for these governmental funds. Okay, we don't use them for the proprietary funds, right? Because proprietary funds are like running a business, right? The water department, right? But governmental funds are kind of the general other kind of stuff that goes on in the government, and we do some slightly different accounting, because how do we recognize revenues when we just get to say, you give us money? There's no service being provided. Well, there is, but I mean, there's not a one-for-one exchange, I guess I would call it, right? It's not like I sold you something and you gave me money for it, or you owe me money for it, right? So there's not that. So it's kind of interesting, and when do we put down the expenditure? All right. So modified accrual, it's this separate form of accounting, and two things that are really important to understanding is that we have expenditures, not expenses, in governmental funds. Right? We have governmental funds and we have expenditures. We either spend the money or we don't, right? And that's an expenditure. And we have fund balances. So at the end, right, we talked about this, at the end, assets minus liabilities equals a fund balance. All right. There are revenues, but revenues are recognized differently. So we'll talk about that in a little bit. And there are just no expenses in modified accrual. We don't call it an expense. An expense implies we've used up an asset. And we may not have used up an asset. Well, technically we spent some money, but maybe it wasn't our asset. Maybe it was a grant and then we paid for something or got reimbursed for something. We did a service and got reimbursed. You know, we fed the school children under this school child program and now we get reimbursed. So, you know, government works very differently, but definitely there's expenditures. But it's not an expense. All right? Or we're not going to call it an expense anyway. All right, so the accounts that we use, so remember, we're preparing these financial statements, which means as transactions occur, right, we're debiting and crediting accounts, right? So what accounts do we have that we're keeping track of for these statements, right? Well, some are called permanent accounts, so just like with corporate financial statements that you've already learned how to keep, we have assets and liabilities. Right? Which pretty much what it sounds like. The distinction between governmental funds and other types of assets and liabilities, when we do this balance sheet, if you take a look here, you don't see things like buildings, equipment, right? You don't see any capital assets, right? That's because we're just keeping track of stuff. In an organization that's for profit, we'd probably call it operations. So it's kind of like all current things, right? So what are we doing this year, operating wise? It involves assets and liabilities. All right. So the accounts that we're using for this balance sheet, of course, assets, liabilities. We have this interesting category called deferred outflow and deferred inflow. That's because of taxes and grants and things that, yes, they're declared, yes, they're going to happen. Expenditures, yes, they're going to happen, but they haven't happened. So we've declared that, so we, you know, they're deferred. You know, it's kind of like this, the word means the same thing it does in accounting. It's deferred, it's going to happen later. So we have that as an interesting category. We've got some resources that are going to come later, like taxes, and we got some outflows of resources that we're going to pay later, and inflows like taxes, deferred revenues, typically taxes. And then the fund balances, right? So we get these various fund balances, the assets minus liabilities equals the fund balances. So those are our balance sheet accounts. And they stay open, of course, just like a balance sheet carries a balance to the next year. So these nominal accounts. So you might equate this, right? On page 35, we have the statement of expenditures and changes in fund balances, right? So revenues minus expenditures is how our fund balance changes, right? Kind of like an income statement, but there's no income statement. There's just, we get in some money from taxes and grants and provide some services and get some money in from that. And then we have expenditures. We have to do stuff. We have to pay the police department. We have to buy gasoline for police cars. We have to feed the school kids under the school lunch program. Just, you know, whatever we spend that money on, those are expenditures. So we have revenues and expenditures. All right. And they're going to end up on here. So it's not an income statement, but it's kind of the same idea, right? And of course, by each fund will have their listing of expenditures. Now, So these are closed at the end of the year, right? So these are what we close out and transfer the balances to that fund balance. Just like think about when we close revenues and expenses and we close them out to income summary and then we close income summary to retained earnings, and retained earnings changes on the balance sheet, right, in regular old-fashioned accounting. Well, in this accounting, we close out the budgetary accounts, the revenues and expenditures, and they become our new fund balances, right? So I kind of equate fund balances to retained earnings. It's not the same thing at all. We don't have earnings. We're not retaining them. We're going to spend them at some point, but you know, that's how that works. And also you'll notice this category called budgetary accounts. So of course in 2302 you learned how to create a budget. In this case it's slightly different. Budgets are approved by the governmental body, right? So we actually book them on the books. So like when the state legislature approves the budget for the state of Texas, that gets booked, and then we have our revenues and our expenditures, and then we transfer from the budgetary account to the actual expenditure account, and then anything left goes to net position. So that's kind of an interesting facet of modified accruals that we'll talk to in a little bit. But just like regular accounting, balance sheet accounts stay open, carry a balance, nominal accounts get closed at the end of the fiscal year. All right. So governmental funds, right? That's what we're talking about. None of the other funds right now. We're just talking about the governmental funds, right? So under governmental funds, we're using this modified accrual, current financial resource measurement. Generally speaking, they're almost always cash, and something that's going to be converted to cash very soon. All right. So in these governmental funds, there's something that's going to be converted to cash very soon because we're going to make this expenditure. It's all about the operations of the government for a certain period. All right. So there's only those current liabilities like accounts payable, right? Something we're going to pay very soon, not the long-term bonds. So governmental funds, if you look here, you'll see, this is interesting. There's nothing about, I mean, obviously the police department has cars and you have to pay for those. Those are capital assets. Not in here. They're not in the governmental funds. That's capital expenditure. This is just about running it. So this would be about policemen's salaries, gasoline for the police car, maybe some regular maintenance to the police car, but not buying a new one. All right. So keep in mind, modified accruals. We're dealing with assets and liabilities, but only really current ones. All right. And of course, another thing that makes modified accrual accounting different is we use these things called fund balance. And here it tells you it's kind of like retained earnings. And when we close the activity accounts, right? In other words, the revenues and expenditure accounts, the activity and the budget accounts, when we close those accounts, they get closed out to the fund balance. So we have a new net position in the fund balance. All right. Now, the fund balance represents the net resources in the fund available for future spending. All right. So if you think about it, this fund balance is what we can spend in the future. If you look at these fund balances, and let's take a look at $33, you'll see we have these different categories, right? So this is telling us, so if it's not in the fund balance, it's already been taken out of the fund and used in terms of an expenditure. All right? So it's just gone away. Kind of like an expense. We don't have it anymore, but it's not called that, right? So if it's not in the fund, if it's in the fund, we're going to spend it in the future. However, even these funds are varied in how we can use them, right? Because even though we have the actual, I guess, money available for spending, or the asset available, I should say asset available to use, right? Because they're not necessarily money, they could be supplies, right? Even though we have that asset available, not all of them can just be spent on anything we want, right? Some of them are restricted. The funds that came from the government grant for the school lunch program can only be spent on the school lunch program. So we need to note that yes, we have all these different funds with balances, right? Here's a fund balances, here's fund balances, different fund balances. Doesn't mean we can just spend them on whatever we want. Some are restricted. So let's talk about these categories, right? Let's talk about this idea that we report fund balances in categories. And you can see if you look at page 33, down at the bottom, here's our fund balances, there's the categories, right? So let's talk about this stuff. We're trying to tell the world, as a city, as a school district, as Texas A&M University Kingsville, whatever organization we are, we're trying to provide people with this information about these funds have these amounts in them, but it doesn't mean we can spend it all, right? Because people are going to go, well, look, you have all this money in these funds, I shouldn't have to pay so much in taxes. Well, not quite. You know, a lot of times those funds are what we call constrained, right? We can only use them for certain things. So that means I still need your tax money because these funds are constrained. I can only use them for these certain things. So let's talk about how that works. All right. Now, fund balance, this term fund balance, only appears in governmental type funds. All right. This is not something you see and the government-wide statements, right? So if you go back a few pages and look at your government-wide statements, you won't see these various categories of fund balances, and you won't see them in proprietary or fiduciary funds, all right? So, okay, that's great. It's only government, so everything we're talking about today in this chapter is applying to governmental funds, all right? Now, there's 5 categories, as you might have noticed on page 33 down at the bottom. They're called non-spendable, restricted, committed, assigned, and unassigned. All right, so let's talk about the 5 fund balances when we come back.